wanted us to look at Tiger Brands. Now, Quinton, these are the Tiger Brands is slowly becoming one of my stocks that I keep on my radar. Why? Because for 3 consecutive weeks now, that 40-week moving average is being tested. If the share can change 235 Rand and 9 cents into a support on a Friday close, that means my long-term sentiment towards the share will change to positive. If I zoom out, you can see that strong support level there around 228 Rand 46 has remained a support now for 3 consecutive weeks. And that tells me that there is buyers' interest. That tells me that the buyers are protecting this share. So we can see also that the 40-week moving average is a strong tool or indicator to use on this weekly graph, because the last time the 40-week moving average was a support was back here in February 2018. Also, what I do like about the Tiger Brands graph, Quinton, is the fact that I've got a window here. Now, as a technical analyst, windows are nice possible targets that one can aim for. And that window is waiting between 409 Rand 39 and the low of that candle at 416 Rand. So there's a nice target to aim for. Now, we know the rules around windows are they always get closed. It can take days, months, weeks, even decades. But the rules are they get closed. And remember, these are weekly graphs, and windows on weekly graphs weigh very heavy. So therefore, you should take note of that possible target. Yes, my stochastic is overbought, but again, those 2 moving averages are still pointing upwards. My blue line is clearly still pointing upwards. There's no sign of a divergence yet that big test is whether it can change that 40-week moving average into a support. It's coming from a very low base. There's higher lows. That candle on the 4th of November is a strong bullish engulfing candle. We can see there was a lot of interest in when that news came out that they wanted to sell that division that had this listeriosis outbreak last year. So the graph is starting to look good, but the big test is that 40-week moving average. As long as that 228 Rand 40 level remains a support, I will feel optimistic about Tiger Brands, and we can assume that new lows will obviously take place when 201 Rand 15 changes into a support. I think it is a graph to take note of, especially for the long term. Maybe even a pullback, and maybe Quinton, if you want an ideal place to enter is, let's say the share pulls back but finds support at a higher level than this low, and it lifts its head again above this level, the next higher low will be confirmed, and that will be seen as very positive for Tiger Brands, because then it will almost give you an opportunity to get in. It's not an ideal place to enter when the share is overbought. You want to enter it when it's on the oversold side. In other words, in the case of a stochastic below a 20, that would be the ideal place to enter. But for a long-term investor, maybe you can start to nibble on it, and if the next higher low is confirmed, no matter where it is, then add to your position. But at the moment, the graph is starting to attract some interest. Polo sent us an email and he wanted us to look at Halliburton. Now, we've previously discussed Halliburton on the show, and that was here around that in March 2019 about that possible cup and saucer formation that we spoke about. But we could see, the news just took the share to new lows. But what recently has happened, it stopped making lows and it's building on a possible double bottom. Now again, a double bottom is a possible turnaround formation. A pullback, found support, found resistance, pulled back, found support again here. And when the share can change these resistance levels into a support, we can see higher levels on Halliburton. Now, some might say, Christelle, why don't you use the neckline at the top of that candle? Remember, for a trend line to be strong, you want it to have as many touching points as possible. Now, I don't count a point when it pierces a candle. I only count it when the real body or the shadow gets touched. It touches it. So then you count them and then you see, whether the trend line will be stronger when you pull it at the real body or we're at the top of the shadow. Now, technically, when the share changes $21.51, Halliburton changes that level into a support on a Friday close, that double bottom will be confirmed, Paulo. And what is the target of that double bottom? It's the length of the left or the right leg projected upwards from where the formation was confirmed, which means Halliburton can go to $25.15. And take note, it will take the stock through the red line, which is the 40-week moving average. And the last time Halliburton kept the 40-week moving average support was in the week of the 4th of June 2018. So it will be a big test. That 40-week moving average is waiting at $23.35. If the share can change that level into a support, it will be seen as positive. When will I start to worry about the share? When it changes $17.71 into a resistance again. Paulo, I think you've got something here. This graph is starting to look really good. Jess wanted us to look at Barrick Gold. And I want to look at the one on the New York Stock Exchange because they're also listed on Toronto. But something interesting, I mean, we know gold has rallied and a lot of the gold shares, not only on our local exchange, but even internationally, has done double-digit growth this year. However, Barrick Gold might be giving us an opportunity here for gold investors that want to add or maybe could not make use of the previous rally. Now, we've got a clear falling wedge formation here. Now, I want to just zoom out so that you can see the total graph in perspective for the last 4 or 5 years. So you can see it's not close even to its highs because the high was there around July 2016, around $23.44. But what I like about this graph, Jess, is that there is a falling wedge formation that has now been confirmed. Some might even call this a bullish pennant because of a rise and a pullback, or a bullish flag formation if you want a flag that looks like the one of a sail ship. But what is important is the top line, that trend line, that diagonal trend line of the top banner of my flag or my falling wedge has now changed into a support. And that is seen as positive. So technically, only when Barrick Gold starts to trade below $15.99 will I be concerned about it again. I love the fact that the pullback went as low but not close to the 40-week moving average. That is seen as positive. It tells me that the buyers started to protect their stock before it could even reach the 40-week moving average, waiting there around $15.44. And that is seen as very, very positive. Now, what is the possible target for this flag or falling wedge formation? So some might take the tail of the width or the length of the flag, but I want to be conservative and maybe even take it here in the middle and say the length of the wedge projected upwards from where it was confirmed can take this stock back to $18.46. But we know it can even go a lot higher. But that is a possible target one can aim for when the share continues to keep this diagonal line waiting there around $16.58 as support. My stochastic is nicely oversold, and take note, my shorter moving average looks like it wants to start to turn around, but the confirmation of the turnaround, the confirmation of the positive divergence will only be when those two moving averages on my stochastic start to cross one another to the upside. That's when my confirmation will be on the table. So Jess, I think this is a beautiful graph to maybe get in, as I said, maybe top up on Barrick Gold again. I've also looked at Newmont. You wanted me to compare the two. I would rather go for Barrick Gold at this stage. I've got the confirmation of a positive formation and I've got an oversold indicator. I think this is an ideal place to maybe enter. Mohammed wanted us to look at Macys. Now, Macys listed on the New York Stock Exchange, one of the biggest retailers out there. And if I zoom out, I mean, they are on record lows. I mean, the last time Macys traded around these levels was in August 2010. I mean, it went as high as around $73.44. But Macys is now currently caught within this descending channel. But look what happened last week, Muhammad. It tested that upper band of the descending channel, and this week it could not keep it as support and retraced from it. That is seen as negative. But what I do like about this graph, Muhammad, is the fact that every pullback is a little bit higher and they protect it to higher levels again as the previous pullback. So and that is seen as higher lows. So it will be very optimistic and seen as very positive on this technical graph when this buyer starts to buy the share and continue to protect these lower levels on the graph. We can almost draw in a trend line here to make sure that these support levels gets honored and that the stock continues to consolidate above it. When will this descending channel be confirmed? When Macys starts to consolidate above $16.44. And what is the target of this possible formation? Again, conservative target, the length of the channel projected upwards from where it will be confirmed, and that could possibly take Macys back to around $23.81. Now, we know the sentiment around the US, there's negativity depending on which sector you look at, but also some sectors that might be possible turnaround stories if they get some of their house in order. But I like this graph, Mohammed. It's a positive, descending channel is a positive formation. I would keep my eye on those higher lows and above those levels at around 1645. As I've said, that descending channel might change into a support and lift Macys to higher levels. Jonathan wanted us to look at a USD-ZAR currency pair, the rand against the US dollar, that has been testing a lot of patience and also capital ventures because they're not sure what to do with this currency pair. And the rand is one of the most difficult currency pairs to forecast or to see what it's going to do. But we can clearly see, and we've spoken previously about a possible ascending triangle or a falling wedge, depending on which support level you want to use. But I have decided to stick to my rising wedge, The rising wedge will be confirmed when that lower band, waiting there around $14 Rand 65 against the dollar, changes into a resistance. Now, take note how close that is to the 40-week moving average. So technically, that 40-week moving average is waiting at 14 Rand 55. So if my Rand starts to consolidate below these levels, I can see a lot stronger Rand. But also take note about these lower highs on my Rand. That tells me that there's definitely buyer's interest, or if you a stronger Rand means a weaker dollar. So it can be a bit of both. But what I do see is maybe a stronger Rand in the future if I continue to look at my rising wedge. So technically above 15 Rand, I might see a weaker Rand again. But as long as these levels below 1487 remains a resistance, and especially if that lower band changes into resistance, I can see the Rand maybe back at 1425, and I know it sounds impossible, even 1390. The big test is that 40-week moving average. Above it, we expect a weaker Rand, but below it, a stronger Rand. At the moment, I still see some strength as long as 15 Rand remains a resistance. Please feel free to visit our website or follow us on Twitter to send through your requests for next week's show. Have a fabulous week. Cheers.